Hi there, this is Robin Hart with the Home Loans with Hart team of CMG, and this is our weekly market watch video for those inquiring minds who want to know a little bit more about what's happening in the mortgage industry and how it's going to impact your ability to buy a house, refinance that, whatnot. And right now we are just suddenly in Q2. It is April 3rd. It's the year of the fire horse, so it's blowing by quickly. And the month is April, so it's Earth Month. So yay. All right, let's dive into some rates and see what's happening in the marketplace, and perhaps we can figure some stuff out. So, okay, weekly rates. Now, this is reported by Mortgage Nuggets. It's 7-day average from over 200 lenders across the United States. So it's not a rate quote, but just kind of an indication of where things are at. 30-year fix came in at 6.41%. Now, that 6.41% is slightly down from last week, but keep in mind, last week everybody was talking about how the war was going to be over in a matter of days. And now it turns out it might be months. And so rates kind of took a dip and now they're on their way back up. So 30-year fixed 6.41%. 15-year fixed came in an average of 6.01%. 30-year fixed FHA and VA came in under the 6% at 5.9%. But I hate to tell you, it's back on the upward trajectory because they don't really like what's happening. Now, what is happening that's causing these rates? Well, it's kind of the war with Iran, Israel, America. It's not good for mortgage rates. Now, let's talk about it. I don't want to say yes or no. This is, we need to be at war. What I am telling you is it is impacting interest rates. It will impact all kinds of finances going forward. Now, obviously, we recently saw that mortgage refinance demand plunged by 40%, and actually total applications, including home buying, dropped 10%. So Americans have already stated and told us they are ready and willing to buy and refinance once rates get in the fives. So we know exactly where it is that Americans want and are willing to make those maneuvers. However, when rates rise up above that 5%, well, they kind of sit on the sidelines. They are less willing to refinance their homes or cash out on their homes. And on top of that, the home buyers that are already pre-approved kind of sit on the sidelines, hemming and hawing. And that leaves sellers kind of sitting on the sidelines too, wanting to negotiate, but also wanting to keep as much as they can of their equity. So, what's causing these things? Well, pretty much it's the war and the fighting over the Strait of Hormuz with Iran. Now, the Strait of Hormuz, keep in mind, it's a waterway to where over 20% of the world's oil is shipped through and that channel, and the channel is kind of closed or limited in access for a pass through of the ships. And when it's not available, it actually increases the shipping cost and the overall cost, but it also increases the insurance cost of those ships. So it actually exponentially increases. And we've already seen previously barrel of oil cost $50 to $60. And now a barrel of oil is solidly over $100 a barrel. And I've been told to expect for it to go up to $150. I'm like, oh, wow. Okay. Well, so far, now that barrels are over $100, we've seen at minimum a dollar increase in the prices of gas per gallon at the tank. So here it is. We may see another $4, $5, $6, $7 gas prices going forward because they are going up and it is inflationary. And inflation is the enemy of long-term mortgage rates, short-term rates, and even bonds. So at the end of the day, the war is not good for mortgages. That's it. All right. Now, what happens on the selling side? More than half of homes listed are sitting unsold for 60 plus days. Now, 52% of homes since February nationwide have been on the market for 60 plus days without going under contract. Now, that's the highest since all the way back to 2019. Okay. And that was in February of 2019. So typical homes that did sell, spent about 66 days on the market, the slowest February pace in over a decade. So the dynamics kind of with sellers, they're still listing as high as possible, hoping to negotiate, but buyers are kind of pulling back with the higher rates and the economic uncertainty in the Iran war. And Florida metros are actually hit the hardest. Miami actually leads the nation with 62.6 of the listings staying on longer. And those are only followed by San Antonio and then Pittsburgh. So the Bay Area remains the lightest markets, with San Jose just at 19.8%. So, all right. Now, last week we did report this Florida man used ChatGPT to sell his home, and he felt like he made $100,000 more. That's kind of rumor has it. Since then, I've heard a lot of pushback from agents saying, no, no. So basically, he saved quite a bit of money on basically agent costs. But at the same time, the pros are saying, well, he actually didn't save as much as what he thought he did. No. Now, I myself, in the last week, have had my own experience with ChatGPT. So weirdly enough, the time that ChatGPT ruined a deal. So here's kind of what happened. I have some buyers, fully qualified, excellent buyers. They submitted a full price offer, but asking for seller concessions. Nothing out of the normal in the size. I think it was about 2%. Okay. The buyer submitted the offer, full well expecting. They love the house. They're excited. The seller took the offer, submitted it to ChatGPT, and said, how do we make this offer better? And it just went scorched earth on the offer. They was asking things like, we want an appraisal waiver. I want to increase your option money from $300 to $1,500. It asked for the agent cost to be deducted by 50%. It asked for the seller concessions or seller paid closing costs to be paid and lowered to 30% of what the borrowers were asking for. I mean, like over and over. Plus, it asked for a 90-day lease back, all these things. And the buyers were so put out that they just said, hey, they gave them a chance to say, hey, you can remove this stuff. And the seller was like, no, seriously, this is what I want. And the buyers wound up walking away. And that home is still on the market to this day. So the seller is kind of confused as to why and what the difference is. And yet ChatGPT itself didn't understand the nature and the market ability and what type of market we were in. So it totally took the data from, say, 2020, compiled it, and added those terms in. That deal would have worked under 2020 terms in 2021, but in 2026, we've got a different market and a different climate. So it just seems to me like it may not be the best, but as an agent, I continually tell you, take the information and plug it into chat to see what chat is coming up with so that you can be better prepared to protect your clients from themselves in some cases, and also to be able to counter what ChatGPT is doing. Now, it's interesting. I do have this weird postulation of, well, it's interesting if an agent misleads a client, wow, an agent can get a complaint. They can get they can have their license revoked. They can be sued. How about that? I wonder if, I wonder if anybody is going to contact Sam Altman in this case, because Chat is acting as an agent, guiding people as agents, and possibly in some cases clearly giving bad advice. So this might be a counter and might be a necessary item to where it needs to be addressed because these clients are getting bad information. So, all right. Now, I did say earlier it is Earth Month and Earth Day is coming up, but to celebrate, I wanted to show this beautiful picture that I came across today. It's from the spaceflight Artemis 2. They took a gorgeous picture of the Earth. It is beautiful. Love it that it's not flat. How about that? All right. Now let's make it happen with some fun. This is kind of cool. Sometimes dreams don't always wind up on the big screen. And in this case scenario of Kate Bolger, who has worked with the likes of like Martin Scorsese, Steven Soderbergh, and even Francis Lawrence. She's worked with these big names. I mean, she can throw down at a cocktail party with huge names that she's worked with, and yet Tinseltown couldn't hold her dreams. And so she left Tinseltown and decided to leave for a small town to open up a candy shop, which was her dream. Now, it's interesting. She called the candy shop, the Village Confectionery, and she opened the shop in February 23rd. And She actually opened it in the town of Sleepy Hollow, which is a real town, people. So that's kind of cool. But she previously filed the dream under Impractical Fantasies. And yet now, rather than working on fantasies in film, she's working on her own dreams and making those dreams come true, which is amazing. Now, not a prognosticator, but I believe we may see Kate in the future on like the Hallmark Channel or possibly, I don't know, a Lifetime Network where she writes her own screenplay about her own life with the confectionery. So that's kind of cool. All right. Hearts meme of the week. This is pre-approval. You do not have one. See a house you will not. I love the wisdom of Yoda. So there we go in a heartbeat. All right. So at the end of every video, we do kind of share with it and try to tell people, hey, guess what? It is the best time to buy. When is the best time to buy? I don't know. It's personal. Okay. It honestly is. It is personal because it depends on whether or not you have credit, a little bit of savings. Even if you still need down payment assistance, it might be the best time because sellers are willing to pay for some closing costs in most case scenarios. So might be the best time to buy, but it depends on you whether or not you have your own financial ducks in a row. So give me a call to see if those are available and ready now. And if you like this video, please follow us on any of our social media outlets. We're on LinkedIn, Facebook, YouTube, and the artist formerly known as Twitter. I'm Robin Hart with the Home Loans with Heart team of CMG, where we help build wealth each and every day with clients to make sure that they build their own wealth through housing. So I'm Robin Hart. Have a great week. We'll catch up with you soon. Bye.